Good morning, everybody, and welcome to the GoPro Trading Academy Monday morning market review, being held by yours truly, as always, Ian Giffen. And of course, today is also the first session in our very first Traders Bootcamp that we are holding this week. I don't know about you guys, but I'm looking forward very much to the next few days where we start delving into things in a little bit more detail, but also have a chance to, in particular, most importantly, run through the trading process for several of our really successful strategies so that you can see how that works on a real-time basis. It's all well and good to learn the rules of a strategy, but to actually see the process take place, one step at a time, and then be able to go away and apply that yourself will allow you to be able to apply those three foundational pillars. In particular, the ability to be consistent in all of this is what is so essential, because consistency implies being able to take every valid trade. And we're going to have a look at what that is. Make sure that you know how to do that. And we're going to be doing that real time in an absolutely practical fashion. So I hope you guys find lots of value in that in the bootcamp. That also means that today is going to be a little bit different from our normal Monday morning market reviews, because I'm going to be helping you put together your initial shortlist for the week. Many of you already know how to do this, who've been on my in-person training courses. So if you do, then hopefully this will be a great refresher for you. And if not, I think you'll see that this makes life quite a lot easier. So in fact, let me just show you very quickly what that means. Just using a spreadsheet form over here. You're welcome to do it in a handwritten form. I still like writing things down, to be honest with you. But just so I can also show it to you, this is the spreadsheet that I'm going to be using. You can see we've got a sheet for both weekly and daily. And all we want to do really is identify particularly those pairs that are trending, whether the trend is strong or weak, and what phase of that trend we're in, either phase 1 or phase 2, which, as you know, is corrective or impulsive wave. So we're just going to run through our instruments, and for both the weekly time frame, which of course is the selection time frame for our daily impulse, and then the daily time frame, which is our selection time frame for the H4 impulse, we're going to be looking at that. And I am going to be focusing today on the impulse family of strategies. I will be talking to you guys through the course of this bootcamp on the hybrid strategies, which still, by the way, need this. And I will show you how we use this exact format. You just basically select slightly differently on the hybrid that you would do for an impulse. And then likewise for continuation, in fact, as well. And then we're also going to be looking at the overlay strategies, certainly where we are at the moment with a multi-time frame overlay, which has been working really nicely recently. So I'm going to be going into that in more detail, of course, in the next couple of days. So for today's purposes, however, let's just kick it off, as always, with the Euro USD. Let me just make some space on this other screen. Right, okay, so here we are, Euro USD. Let me just go to weekly first. And as you know, from the last several months, we've basically been stuck in a relatively broad channel over here, which as this channel matures, will probably narrow down. As you can see, we've got lower highs and higher lows. So this will end up being a symmetrical triangle. We don't know, obviously, how long this is going to go on for, but right now there's no real action showing on this. So as far as my worksheet is concerned, I'm not going to put in anything on the weekly score sheet for that. Just leave that absolutely blank. So going to daily, however, slightly different pictures. You know, we had a potential trend which came to an end the week before last, and then last week we had another bearish breakout. I was hoping for some more decisive market activity, a sustained directional bias here, but certainly not on this pair at the moment. Nevertheless, this is a potential trend. We do have a breakout here, which is effectively a resumption. You guys will remember the 3 R's, which are range, resume, and reverse. This is a resumption, but as a resumption, we don't yet have an established resumption of this trend. We've still just got the initial breakout here, but technically it's still a trend. So that's fair enough. Obviously, bearish trend. Is it strong or is it weak? Well, clearly it's not strong because the retracement wave that took place on Thursday and Friday came straight back inside of that channel. So it is not strong. And we are also in a technical phase 2 at the moment. It may well end up being a phase 1 if this bullish movement continues and we get a higher close. But for now, it is a phase 2. So leading on then to our next pair, which is the cable. Looking quickly at weekly as well. Oh, let's make sure I get these on the right sheet. So talking and describing and writing down all at the same time is likely cause for disaster. Let's try and avoid that. Okay. Right, on the cable, we're also very much inside of a channel. As you know, last month we had this test of the resistance level and the market rolled over last week. Nothing really, inside bar, bullish inside bar, showing a respect of a support level here. No question about that, but still, this is not something that we can really use to our benefit. What we did see on the daily time frame from the previous week's breakout, you can see that that's turned into nothing. We have had a phase 2, which means breakdown and sequentiality of cyclicity. Clearly, we're inside the channel here, so there is no trend here. This was something that was valid for an overlay strategy on the lower time frame. We'll talk about that more during the course of the week. There are a lot of examples of the overlaid trades, certainly on the H4 time frame. Which we'll be looking at either tomorrow or Wednesday. Okay, so on neither of these time frames do we have a trend, so we can safely move on from that. And let's just go to the correct time frame here on dollar yen. Looking here at daily, let's go to weekly. Weekly, no change in the picture, except that last week did ring that high. You'll recall we spoke about the fact that it was looking interesting for a while the week before, but it is very much a ringed high, bearish impulse candle straight back inside of that channel. So because we did actually have a breakout here, and not much of a breakout, but still, you've got to draw the line somewhere. It did close outside of the channel. That means that this is, in fact, still technically a trend. Remember, in order for us to be able to say that it is no longer a trend, even though it's still a potential trend at this point in time, it is nevertheless, therefore, classified as a trend. We can only say that it is no longer a trend if we have a breakdown in sequentiality of cyclicity. So either this bearish wave needs to come and close below the previous wave low, in which case we'd have phase 1, or we need to see this being a phase 2 followed by a second phase 2, which would give us a classic head and shoulders pattern, which would obviously then mean that this was a false breakout. But until then, it is technically a trend. Is it strong? Well, clearly not, because it is closed back inside of both the channel and the previous phase 2's price territory. And you'll recall that that is how we determine the difference between a strong and a weak trend. So that inside close inside the channel and inside the previous corrective waves price territory. So it is weak. And it is a technical phase 2. Of course, it could come down and give us a lower close as well, but at this stage, that is not what is happening. All right, so quite straightforward there on the weekly time frame. Let me just go back. Sorry, wrong button. To the daily time frame, there is that the evidence of that false breakout on weekly was a breakout here on daily, and here you can see how we had it roll over from a bullish phase 1 into a bearish phase 1. Now that clearly then means that we had a false breakout, because we did not get an establishment of cyclicity. In fact, that bullish cyclicity broke down. So in fact, this was probably not a false breakout. This was just the end of a trend, because we did have an established trend before this. So just scratch that. But still, the principle remains the same. Cyclicity has very much come to an end on this, and therefore that bullish trend is completely over. So into a range here on the daily time frame, and nothing else for us to look at. Dollar Swiss weekly first, deep inside of a channel, no trending, no nothing. And you'll also notice so far, for those of you who are looking for WM patterns, if you're desperate to find something for a daily impulse, although there are a couple of setups later on in our list, but you will notice that we haven't even got any valid WM patterns basically across most of these instruments. And then we had a breakdown in that bullish cyclicity. We did get an established trend with that phase one wave, but then you can see phase two, which rolled over again last week with the FOMC minutes coming out. So that is very much an into that trend as well. And therefore we are back inside of a technical range. There's nothing for us to trade on this in terms of our core strategies, but we've had, I think we had a nice, we had a couple of trades here. No, we actually didn't have anything on the overlay on this one. It was on something else. All right, so moving on then to USD CAD. First of all, weekly, this is still a bearish trend. Cyclicity is still intact on this. I know this has been going on for quite some time now. But having said that, of course, we've also got the closes about a month ago. We had that first close inside of both the channel and our previous phase two's price territory. So on the weekly time frame, this is a bearish trend, but it is no longer strong, which it was before. So, but we can classify it as trending. It is in a technical phase two of that trend at the moment as well. Last week gave us another higher high. We had an inside bar the previous week, and you can see that we've had just a series of higher lows, which means that our inside bar did not lead to this previous high being ringed, because we had a continuation of that with that higher high. So it is still very much a phase two of what is a weak trend on the weekly time frame. So looking at daily on USD CAD, we did have a breakout last week on, don't think it actually happened on Thursday. I mean, Wednesday, it was Thursday where we finally got that higher high, higher close, and then Friday it rolled over again. Friday, across many of these pairs, was a very significant retracement day. So many of our trades actually did get stopped out, before we actually had a chance to really get going with them. I just want to see if we had an opportunity here at all. Let's just move this across. So on that day, did we have any setup candles? No. You can see that we were looking for a bullish impulse candle here to go long with an H4 impulse, but that final selection criteria was not in fact met. And then it rolled over, of course, and that is in fact an overlay. So I'm sure you guys are looking forward to that. It was a very nice winner on an overlay. So we didn't actually have any losers on that on H4 impulse, but we got a nice winner on the overlay. So that did come back inside of the range on Friday, which means that although it is trending, we cannot treat this as a strong trend. We at the moment still have got a valid W pattern. So this close, I think, let me just double check that. I don't want to tell a lie. 40.9 and the high 854. So let me just make sure I'm looking at the right thing. 858 close 409. So perhaps not. So this looks like it actually did close inside. So in any case, we were looking for a valid W pattern over here, but it did come back inside of the channel anyway, which is a bit of a disappointment. Let's keep our eye on this. If you're not waiting for WM patterns, if we do get a proper reversal and this starts coming back north again during the course of the week, we'll be looking to trade that. But we'll keep an eye on this through the course of the bootcamp. Anyway, let me just classify this properly on the daily score sheet. USD CAD trending. It's no longer strong because of that inside close. And if and obviously, as I say, if it's not a valid W pattern and you are only trading W patterns, you would not label that as strong either. And at the moment, it is still very much a phase 2. So that's that one classified. Takes a little bit longer when I have to write things down, obviously. Normally we're able to nip through these a lot quicker, aren't we? Okay, so excuse me, on the Aussie, not much of a change in the picture from what we discussed last week. So we did have that bearish breakout several weeks ago. Nothing much has happened since then. We did get an inside close, but technically we are still in this bearish wave. Now, talking about wave quality, you will notice that after that initial breakout candle, we have not had a single impulse candle here. They are all non-impulse candles, which is a little bit disappointing. In any case, because of the breakouts, this is, on the weekly time frame, a potential trend. So we need to classify it as such. Is it strong or weak? Well, at the moment, we obviously got our initial breakout wave. So we do need to classify this now at the moment as strong. But as I mentioned, this phase 1's quality is not that fantastic. But technically, with the initial breakout, it is strong. And we are in a phase 1 of that trend. So technically, all right, on the daily time frame with Aussie, that poor quality that you can see in those candles over here is represented by a weak trend. So you can see how the wave is the trend on the lower time frame, and a similar kind of information is being given to us across both of those time frames. So last week we did in fact have a continuation of the bearish trend that we were in before. So we are still on the daily time frame trending. You'll notice that Friday's candle was in fact a bullish impulse candle. Now I haven't drawn in the extra wave here as yet, but I'm fairly certain that this is going to at the very least be a single candle wave, regardless of what happens throughout the course of the next week. But let's wait and see. I'm going to leave it as such at the moment, but it is technically more probably more useful to classify this as a phase 2. So in other words, the phase 1 is over, even though this low has not actually been ringed. Now, should this market roll over and come all the way down and make a lower low during the course of today, then certainly, we would then treat this as non-relevant, isolated high up here. That could well happen. I'm not prejudging this, but in terms of what is actually useful for us at the moment, cyclicity is still intact, but this close is definitely inside the previous phase 2's price territory, so we cannot classify this as strong. And as I say, it is probably more useful for us at the moment to classify this as a phase 2 wave. Now if this was to come further down during the course of today, you might want to look out for trading this on an H4 impulse, but I never trade against a bullish engulfing candle. I think I might have said impulse earlier. I meant bullish engulfing. All right, so we're going to treat that as a phase 2. Hopefully you guys can see why that's the case. Right, going back to the weekly score sheet, and let's talk about the last of our majors and minors, being the Kiwi. On the weekly first, very much inside of the channel, kind of respecting the support level. We've spoken about this. I think that possibly, I think I had to just update or even rewind the analysis on this, because we did get a lower low, and this is potentially going to give us an isolated high and an isolated low. Certainly it is engulfing the previous candle. Now we have no idea what's going to happen to the course of this week. It might continue down, in which case this bearish wave would extend, or if we get this low isolated, it may well be the end of this bearish wave, which means that this overall support level has been respected. In any case, we are still deep inside of our channel over here. Nothing for us to do, looking for any sort of trading on daily impulses and what have you. All right, so coming to our daily score sheet first. Also here, you can see we've had a phase 2 followed by a phase 2. It was the end of that trend. 1, 2, 3, 4, 5. Yes, we did discuss this last week already. Another example of a bullish engulfing candle ringing that low. It could also have been non-relevant, but clearly it wasn't in the end. So there's no trend here at all. We are inside of the channel. This support level continues to be respected, and Friday it bounced off of it again, which gave us a very nice winner on an overlay. So just to whet your appetite for that a little bit more. All right. So nothing for us on Kiwi. Moving on to our yen crosses. As always, I'll go through all the yen crosses first. Here on weekly on euro yen, we are still inside of this bullish trend. So looking at that close again, 74.6 and our high. So we had the outside close there, and we've had another outside close here. So because we've got this sort of sequence of lower lows here, it means that any inside bars, such as the previous week's inside bar, proved to be non-relevant in terms of the low that they isolated. So we got a lower low last week, but still got that outside close, which was quite interesting. In other words, this market is not only still trending, but it is still strong. It is, however, in a phase 2. So weekly score sheet. Get it on the wrong time frame. Trending, yes, and it is strong, but we are in a phase 2. So that's quite interesting. If you're trading continuation strategies on this higher time frame, that would be of interest, of course. But let's go and have a look at what the cyclicity on the lower time frame looks like. And you will see that it was really only Friday that brought us back outside of that weekly channel with this bullish impulse candle. So very strong reversal, ring that low. We did get a technical breakout here. So it was just a breakout below that long tail, but nevertheless, breakout it was. Therefore, we need to treat this as a trend. Looking back at a previous hybrid that we went long on, that just got stopped out with this bearish move, which is all, that's fine. But yeah, so because we had a breakout there, this is technically a trend. We don't have any strength in it, of course. We don't have any valid, we got a potentially valid M pattern here if you're trading that, because our C is, our potential C is nowhere near our potential X, or future C is nowhere near the future X. So that's all well and good if you're looking at that at the moment. However, if you're the channel trader like myself and you need that condition in place as well, we came back inside of the channel. So it showed weakness. And of course, we are also in a technical phase 2. So euro yen trending, yes. Strong, no. Phase 2, yes. So unfortunate that we had these very strong retracements through the course of last week, but it did set us up for a nice little overlay there as well. Okay, moving on. Let's have a look at weekly on GPN. We know that this, even though we've still got the series of lower highs coming down, we are inside of that channel. So technically, yes, it is trending. But we've spoken about this many times over the last while. Certainly 1, 2, 3. This is the 4th week, I think, in a row. We've been treating this as a weak trend, but it is still a phase 2 of that trend. We have not had a breakdown in the sequentiality of cyclicity. Excuse me. All right, so that's our weekly time frame. Looking at daily, similar picture. Didn't quite break out though, of course. That same tail, we had an inside close on Thursday, but boom, back it came in again. So in this case, we're looking at a support level very much having been respected. Technically, however, this is also a potential M pattern for those of you who are only trading WM heuristic patterns, folks. And I'll come to the questions in the end. I just need to make sure I can see everything across all my screens. So that's it's not trending for us because we did not get a breakout, so we can leave this one completely alone. Swiss yen, let's have a look at weekly first. not much change, and two low test candles in a row, all lower highs. So right now we haven't yet got any lows isolated. If we get a higher high this week, then it'll isolate that low. Both of these candles are effectively inside this candle's price territory, but deep inside the channel. Those are just comments on the side that don't really make any difference to us. And likewise on daily, we had the bottom of the channels defined quite clearly across many of these yen pairs on the 21st of June, wasn't it? So where we had that strong reversal, which is, obviously keeping us inside of a relatively wide channel here. But nevertheless, we're also being kept out of trouble because we're not looking to trade any of these markets. We're seeing that support area respected again last week. So there's nothing for us to look at here. So we can safely move on to the CAD yen, which is, as you can see here on our weekly time frame, is managing to survive outside of the channel. So similar to what we saw earlier with the euro yen, it's still outside of the channel. Our closes are still outside of the channel, which means that technically this is still a strong trend, albeit in a phase 2 of that trend. So weekly score sheet, CAD yen trending, yes, strong, yes, but we're in a phase 2 of that. Let's have a look at daily. And I'll show you the results, obviously, of the score sheet in a minute, but hopefully you guys are following along and doing your own score sheet as well. These are all our selection criteria for the different strategies, as you know. So once you know how you've classified each instrument on the different time frames, it becomes very easy to see which ones are suitable, or where the conditions are appropriate for the different strategies. Okay, so CAD yen also had a breakout, also pulled back inside of the range, also have a potentially valid M pattern over here with an outside C close for those of you only looking at that, but we are back inside of the channel. So depending on how you combine those factors, you might get a slightly different answer. Okay, so CAD yen on daily, trending, yes. I don't treat it as strong if it is back inside of the channel. And of course, this is also an inside bar. So if I was doing this on the weekend, as you can see, I haven't updated the technical analysis, but similar to the example that we looked at earlier, I prefer to actually look at this as potentially a reversal at the moment. Again, that is a bit strategy dependent, but certainly with today's higher high, which I know that we're only seeing now and wouldn't have been here if you did your analysis on the weekend, it does mean that this is ringed. So even if this rolls over and comes back down again, this will now be relevant, as will that. So either way, and even if it carries on going further up, of course, even more so. So it is technically the end of this bearish wave, which means I can actually now say that we are in a phase 2 of this. Right, so I wouldn't be looking to trade H4 impulse on this either because of the fact that we're back inside of the channel. But if you are purely looking at a potential M pattern, then you may well be looking for that. I'm not comfortable with that either. We do have bullish cyclicity intact here on the lower time frame. We're going to be talking about that quite a lot through the course of this week because that really is the foundation for the conceptual foundation for both the hybrid and the multi-time frame overlay. Okay, so but this could well give us a bearish impulse candle in half an hour. At the moment, it seems to have come back up inside the previous candle's price territory. But remember, this is the H4 time frame, so it needs to be a lower close compared to the previous 2 lows. I also do like to have it closing in the bottom half. I don't like a test candle because that also tells me something about the cyclicity on that lower time frame. I do think that this would be a really aggressive short if you were trading that. So in any case, we will come back to that. I've just already noted down on this time frame, on the score sheet, what we're looking at on this time frame. Okay, moving on to Aussie yen. And if you do have any questions, folks, please do make a note of them in the chat box. I will get to them at the end. Right, so the picture here on weekly is we've got a bearish engulfing and impulse candle. It made a lower low as well, so it's definitely the end of what kind of a bullish wave we had here. It only ended up being a bullish wave because it made a slightly higher high. Otherwise, it would have been a continuation of that wave. Makes no difference to us. We are deep inside of the channel. If you are trading WM patterns, however, that is a valid M pattern because we've got an outside C close here. So just, but it was, I do believe. But I'm also looking at the channel. All right, so another one of these pictures, very similar, closed outside of the channel and then pulled back on Friday to get back inside of the channel again. So here you can see that there is some bearish movement showing itself during the course of this morning, and it's getting really close to, well, it's actually testing that support level that we can see on daily. You can see how the daily candle has already tested the support level. Yeah, I mean, because of the fact that I am a multi-time frame trader, I can't help but notice that bullish cyclicity is still intact here. So I wouldn't be looking to short this, even if we do get a close outside of the channel. And we'll be talking more extensively about that, as I say, during the course of the week. So Aussie yen on daily, we can certainly classify as trending, but it's not strong because Friday closed inside of the channel. If you are exclusively a WM heuristic pattern trader, then you could classify this at the moment, or you would classify this at the moment as strong if we get an actual C closing below our potential, well, our future X there. So I'll leave that to you, but I'm also focused on the support level. I want to see what happens there. Could easily push through it today. If it does, then Bob's your uncle, away we go. Similarly as what I mentioned earlier, I would also now be able to say that this low is definitely relevant. We can see that, but only because of what's happened today. This being an inside bar meant that potentially would have been non-relevant. I didn't really think that would happen because this is such an extensive and strong bullish candle. So you can certainly already update this for the phase 2 here, and I am going to treat it as such, even though that analysis doesn't really reflect that. But we'll do tomorrow. Okay, so Kiwi yen, you can see how on the Kiwi pairs, it respected the support levels that we're seeing here with Friday's bounce. So yeah, it is what it is. Just look at weekly first. Another bearish engulfing and impulse candle, just like we saw on Aussie yen. So that means that we have had that high now ringed. This is not a valid M pattern though, because we had an inside C close, but yeah, it has looked like it's rolled over here, but very much inside of that channel. But even if you wanted to trade with the WM heuristic pattern, there's no go on that one. So on daily time frame though, similarly, we would be updating our analysis here. So trending on this one is no, because we did not get a breakout, unlike we on the Aussie yen. Right, so let's move on to our euro crosses. Definitely taking a bit longer today. We are basically halfway. Hold on a sec, let me just get rid of this. There we go. Euro crosses, Euro GBP, nothing on daily and nothing on a weekly. So yeah, that activity in the latter part of last week certainly made for some interesting stuff. This is a bearish engulfing. I haven't updated analysis on this. I'm really not interested in this pair at the moment. So just chop, just a lot of chop. And you can see that some of these pairs clearly we absolutely need to stay away from. And that's a great example. Yeah, I didn't even look for any overlays on this. So Euro Swiss obviously did something interesting. You know that this is my least favorite pair. On weekly, we still have this weak bearish cyclicity intact. It's just coming down in a very slow channel over here. But last week's candle being a strong bearish impulse candle and giving us an impulse or phase 1 wave as well. All inside of that channel. Looking like this on daily, where the market really rolled over We'd seen this failed resistance test a week ago. And yeah, then you can see on Thursday, it just smashed right through that support level. I don't trade this pair at all. I don't really recommend that people do, because long term, even though you do get setups like this, long term it just doesn't have a positive expectancy. And yeah, you'll notice here on H4 time frame as well, it's just kind of chopping around this morning. But we are technically still in a phase one wave. We did get that inside bar, which means that if you are trading continuation strategies, you would treat this in fact as a phase two. But if you are on the impulse strategy side of the fence, then this would technically still be treated as a phase one wave. And at the moment, we can't say if, that this is not going to roll over and continue. So I'm going to treat it as such. As I say, I'm not really too fussed about anything on this currency pair, but trending, yes. Well, strong, yes, at the moment, because we still are looking at that initial breakout. And then we're treating it as a phase one wave. So far, this is like one of the most, one of the best instruments, if not the best instrument so far for H4 impulse. Yeah, but unfortunately, it's the Euro Swiss. But I doesn't mean that you can't trade it if you want to. Okay, so Euro CAD, my second least favorite pair. Weekly, here you can see we've got a bullish engulfing candle. It was also an impulse candle compared to the previous week. So I have updated the analysis on this one because it's definitely going to be relevant. But of course, all it means is that it's continuing to respect this support level. So nothing for us on any other time frame. And here you can see that huge chop. This is one of the best examples where we have 3 phase one waves in a row. It doesn't happen very often, but that's bullish, bearish, bullish, all three of them phase one waves. I haven't updated the analysis on this either, but you'll see with today's lower low, it means that that high is now effectively ringed. It's technically a trend because we did get the breakout, but it's not strong because we got the inside close in the current wave. So this obviously will need to be updated later on today, and we will be doing that this evening in our session, our update session. So I'll leave it until then, but nothing really for us to do because it is obviously still weak. If you are a WM heuristic pattern trader, it at the moment is technically what's a potentially valid W pattern. Let's keep an eye on that for those of you who are doing that. So let me just go to my score sheet here, EuroCAD. So we can treat it as trending, but not as strong. And yeah, I'm going to just jump ahead and as I say, treat that as a phase two. Even though I would not necessarily have done that last week, but certainly with a bearish candle, strongly bearish candle as well, it was very likely that this high was going to be ringed. So a little bit of common sense can be applied. Euro Aussie, also very much inside the channel. You know, it's inside the horizontal channel, but it's also inside this diagonal channel, as you can see. So bullish engulfing candle last week. It's not an impulse candle like many of the others, but you can see that this is like it's a recurring theme in terms of what happened last week. Not trending at all, but here you can see a similar picture, you know, where very, very, very choppy and not at all pretty. So there weren't many setups last week. So, you know, I'm sure that most of you have been sitting on your hands, and certainly should have been, because there hasn't really been much for us to look at. And yeah, this kind of choppy behavior, if you're tempted to get involved in the market around these sort of conditions, you can get quite badly hurt. We've had 2 overlays, in fact, so not too bad. But certainly when it comes to our trending strategies, just to look at that last week, you know, I know that some people would certainly have been looking to trade an H4 impulse on Friday. So with the bullish breakout, they're giving us what is technically trending conditions here. That means that on Friday you could have looked for an H4 impulse, but you'll notice that we didn't get anything suitable thereafter. So we did get a bullish impulse here as well, but for me, I wouldn't be taking that because we were by that point in time already back inside of the channel. If you had done that, well, it's not a bad trade at the moment. You'd be in a little bit of profit, and if this continues upwards, you should be able to move to break even quite quickly. But as you can see, once we pulled back inside of that channel over there, wouldn't necessarily be happy with that. But yeah, I mean, if you did take that, then that's fine as well. So this is it's perfectly. We're coming up to quite a few pairs now where there have been some opportunities. So let me just make sure that I record this for our daily time frame. Trending, yes. Strong, no, because of that inside close, and technically still in a phase 2 on this one as well. So I'm going to treat that the same as I've treated the others. Right, Euro NZD weekly, we've had that pullback, bullish engulfing candle here as well, which could end up giving us an isolated low. So with that breakout, remember that technically this is still a trend, albeit a phase 2 of that trend. You might be tempted, and I wouldn't necessarily say this is wrong to do either, to update your analysis to look a little bit like that. So that means that technically, we are still in a trend here because we did have the breakout. We have not yet had a breakdown in sequentiality of cyclicity. This is phase 1, phase 2, even though it came down to that, didn't close below, and therefore this is a technical phase 1. To confirm it, obviously, we need to get that higher close. But it's not strong, but it is a trend. So Euro NZD on weekly, I've got almost nothing down weekly for a while. So trending, not strong, and at the moment still, this engulfing candle, you've heard me talk about how we treat inside candles, engulfing candles differently. With a bullish engulfing candle, I would typically go for what I've done here, which is to isolate that low. Remember, this high could end up being non-relevant if the market comes all the way down and makes a lower low. But yeah, again, a little bit of common sense can be applied here. But also it's strategy dependent. Now, first of all, there's nothing to trade because we are inside of the channel. If we do get a breakout over here, you may want to start looking at that again. But I prefer to go with that as a phase 1. And also from the impulse family of strategies, that is the right thing to do as well. On the daily time frame, huge chop once again. We did get an outside close here, but technically this candle is in fact in the next bullish wave, which means that this bearish wave didn't get any closes outside of that channel. Regardless, as you can see, I mean, do we really care with this this massive reversal late last week? No, not at all. So we basically going to just leave this absolutely alone. I'm sure you wouldn't want to get involved in a market that looks like that. So let's move on to GBP Swiss. So looking at our GBP crosses here on the weekly time frame, just a low testing the support level quite clearly. So this is going to be, I mean, I often have a shadow channel line in here, and as soon as we get another couple of just clone that, and another couple of waves in here, then we'll be moving the bottom of our channel up to this point. And if you were using the LPO channel, then clearly this would also be what you want because your last phase 1 came down here and a couple of false breakouts. So that's that. LPO channel would also look pretty much like this, is respecting the support level. Nothing for us to do, very much in a range. On daily, as you can see, again, we had another one of these very strong bearish impulse candles. This did close outside of our 4-wave channel, but respected the 3-wave channel. So, yep, quite interesting, I guess, in terms of how across all of these pairs, these support levels were respected. on Friday with the reversal that took place on Friday. So it's technically a trend because we got the close outside of our 4-wave channel. So we're going to treat it as such. Very strong bullish retracement, but again today we've got that high isolating that low. So I'm quite happy to treat this now as a phase 2 of this potential trend. It is obviously weak with that inside close. So GBP Swiss on, should be on daily. Trending, yes. Technically strong, no. And we're going to call that a phase 2 wave. Right, so next GBP cross, GBP CAD, looking a little bit more interesting on daily, but let's just look at weekly first, inside the channel. But last week was a strong bullish impulse candle, giving us an impulse wave as well with the higher close. But of course, it's inside of the channel. So nothing to really talk about on weekly down to daily. But daily, on the other hand, we got a breakout on Thursday. So let me just move this across to that point, which means that Friday you should have been looking for an H4 impulse, which we got, and trailed the stop. And I think, yeah, so this morning we've been able to get the stop to almost break even, maybe, you know, a few pips below break even. It's coming back down again now, you know, whatever. It's a very choppy market. These are the times where you need to really make sure that you're aggressively limiting your downside, so that, you know, when you get a huge reversal, you might get stopped out for a loser, but it won't be a big one. We don't mind losers as long as they're small. So anyway, coming back to daily trending, yes, because of the breakout. Strong, yes. Phase 1 at the moment, yes. Friday was an inside bar, but still technically this is a phase 1. Especially treated as such for the impulse family of strategies. So GBP CAD on daily trending strong, phase 1, and of course that is why, along with Euro Swiss, which I didn't want to trade, it is the first of our pairs which has been suitable for H4 impulse strategies. So moving on. GBP Aussie, weekly first. Here you can see we've actually had the breakout. We spoke about this before, where we saw this resistance level being tested repeatedly. Well, last week we finally had a break of that resistance level with a bullish engulfing impulse candle, also giving us an impulse wave. So that's quite a strong price signal. I'm sure you'd agree on weekly. So let me go to the weekly score sheet. GBP Oz. It's one of the more interesting pairs. I'll chat about this a little bit more. So strong, yes, and phase 1, which of course means that this is the first of our instruments that is suitable for a daily impulse on the higher time frame selection criteria. But what do we need? Excuse me. We need to have a pullback before you can take another trade. So I just want to point out that, I'll come back to this throughout the course of the week. We'll talk about this a little bit more. In any event, if you look now on daily as well, that breakout on weekly was also a breakout on daily. So trending, yes. Strong, yes. And phase 1. So looking at H4, there you have it as well. Actually, the stop would have been traded. It was an ATR stop, as you can see. A lot of the market coming back again this morning. Typical Monday morning activity. Kind of coming back down to our entry level at the moment. So yeah, let's see what happens. This is definitely a setup for an overlay. So we may well be shorting this in 10 minutes time. In fact, if it looks like this, we are shorting this for an overlay in 10 minutes time. So just to get your appetite for that even more. All right, so I've correctly classified GBP Aussie. There's quite a lot of stuff that's been happening over here. I'm going to be talking through this as a good training example through the course of the week, where we have had this activity across all three of these time frames. So here on weekly, we've had this repeated test of that resistance level. Finally, we've got the breakout. Then here on the daily time frame as well, we had breakout, breakdown, and sequentiality of cyclicity. So, we've had daily impulse trades potentially setting up, and then reversing on us, giving us an opportunity to go the other way on an overlay, and then the same thing from daily down to the 4-hour time frame. So there's been a lot of action on GBP Aussie. Been really quite cool. I've been enjoying that. So GBP NZD, last of our pound crosses, you'll see we've got a similar picture, not quite as attractive here on weekly, but we've known for a while now, for a month or so, that we are in a trend where we had that breakout on the week of the 13th of June, rolled over, gave us that bearish engulfing or impulse. I don't think it was engulfing, actually. I'm sure we got that right. Almost, but not quite. Giving us a phase 2. Now, of course, this low is not yet ringed, but this is a bullish engulfing impulse candle. It's not yet an impulse wave, but with today's high now as well, we could easily update this, and I'm going to be doing that in my analysis. So today's high has ringed that effectively. There is a possibility that today would roll over. If it made a lower low and came down below here, then of course I'd have to rewind this analysis. So not today, this week, I should say. We've got a whole week ahead of us here. But at the moment, I'm happy to do that. This candle is closed outside of the channel as well. So it's broken back above this resistance level. And so far today, it seems to be supporting it, but still pretty early in the day. Nevertheless, on our weekly score sheet for GBP NZD, we need to continue to treat this as a trending market. And it's not strongly trending, of course, because we've had these inside closes. But nevertheless, and having said that, once we get the breakout as well, we did have that breakout beforehand. With that initial breakout wave, we would already been treating that as a strong trend. But since then, it's shown a weakness. So that's why I cannot call this a strong trend now. We did at the time when we had that breakout until we got that rollover. So what phase are we in? I'm going to treat this as a phase 1 wave. And if we're outside of the channel, continue to be outside of that channel, then potentially here on daily, we'd be looking for a pullback and another impulse candle to go long on this on a daily impulse. So there's still a bit that needs to happen before we could look at doing that. And well, if it pulls back too far, of course, then it means it's becoming back inside of the channel again, in which case we wouldn't necessarily be looking to trade that. So it's really on the cusp, if you like. We don't second guess the market, however, so let's just wait and see what happens, and we will allow the market to determine our moves. All right, moving on to CAD Swiss. You can see on daily, strong breakout here. Come back to that in a second. And that weekly candle, strong bearish impulse candle, impulse wave, big moves on some of these pairs. And although we can't look at trading this on the daily impulse, certainly we can look at our lower time frame strategies where we've had that very strong breakout on Thursday. And on the basis of that as well, I just want to move this across here. Dropping down to H4 time frame, you'll notice that Friday we didn't get any setups to short this market. We have had a breakdown in sequentiality of cyclicity over here. So this cyclicity is still bullish. So I wouldn't be trading the short. Over the last few months, now and again, a question will come up as to, what do you do with an inside bar when it looks like that? Well, I checked the lower time frame cyclicity. If we get a breakdown in this bullish cyclicity, then certainly we'd be looking to short that with an H4 impulse. But again, that is also bringing us into that discussion around the hybrid strategy. And we're going to be talking about that tomorrow and certainly on Wednesday. All right, in any case, on the daily score sheet, we need to make sure that on CAD Swiss, we are classifying this as a trend. I'm going to be treating this as, because of that reversal pattern on the H4 time frame, I can't treat this as a phase 1 wave, despite the fact that we've got that inside bar. I'm going to be treating it as a phase 2. So as I say, we will talk about that more through the course of this week. It is our first breakout, so it is strong. You know, we have no reason to believe that this is not going to be a strongly trending market. And of course, the other reason I want to treat this as a phase 2 is because we have had that higher high today as well, just like many of those other pairs. So hopefully that makes sense. Just want to make sure I didn't forget anything here. No, I haven't. Okay. Right, so moving on. Aussie Swiss weekly, bam, now we're outside of the channel. Another one of these bearish engulfing impulse candle, impulse wave. I mean, it's everything. That ticks like all of the boxes for strength on the weekly time frame. So let's make sure we make a note of that on Aussie Swiss. Trending, yes. Strong, yes, because it's the first breakout, or is it actually? But I'm not going to worry about not calling that strong. As I say, that ticks all the boxes. As far as the candle is concerned, yeah, okay, so we don't have a strong trend in terms of valid WM patterns here. That is true. But in any case, it's looking pretty good to me. And on the daily time frame, same kind of picture. We don't have a higher high yet today. So let's just have a look at the cyclicity on the lower time frame. Beautiful overlay on Friday, went straight to take profit. But yeah, this is starting to look quite interesting. Potential breakdown and sequentiality of cyclicity. I'm definitely interested to see what happens here. Certainly with this almost double top, I know that that's a non-relevant isolated high, but that is something that we look at. It's looking quite interesting with how we retested this resistance level, failed to break through, rolled over, bearish impulse, candle, high test, that's everything. So yes, I mean, you might already be short on this, of course, as I say, with an H4 impulse, because that first candle there of the day, closing at 4 a.m., was as valid, I'd say perfectly valid. So H4 impulse looking a bit like that. What's our, you're looking at standard targeting, we've got only 46 pips ATR at the moment. Let's just put that in. So at least we don't have to do an ATR stop, however. Decent reward to risk ratio. Yeah, it's still early days. Still early days on that one. Let's wait and see. Yeah, I mean, Monday morning activity, as always, not looking very decisive at the moment. Coming up to the end of this 4-hour candle, though, in the next minute or so. So definitely taking us a bit longer today, as promised. All right, so coming back to our score sheet on the daily time frame for Aussie Swiss, trending, yes. First breakout, so strong, yes. And yeah, we don't even have that higher high. And you'll notice we didn't actually have a breakdown in sequentiality of cyclicity on the lower time frame. So I'm treating this as a phase 1 wave, which of course is all the selection criteria for H4 impulse. Trending, strong, and phase 1 wave on daily. And then we got our final selection criteria on H4. Also, just to point out that it was after a valid pullback, clearly a valid pullback. So remember how we score inside bars, that's got a score of 1, but the valid pullback is immediately a score of 2. So with a higher high and a higher low on this pullback candle. Okay, so that's Aussie Swiss. Aussie CAD, first of all, weekly, look how the support level, very much respected. Nice double bottom over here. Which actually was a potential setup for a bullish overlay. Just wondering why we didn't do any analysis on that over here. In any case, we'll talk about that another time. But this potentially should have been an overlay trade. It wouldn't have been a winner. It would have been a very small loser, but in any case, it should have been an overlay on this time frame for weekly. Okay, so and of course here on daily, we are inside of the channel. Okay, I can tell you why it wasn't an overlay. It's because it should have been an overlay. Okay, we'll come back to that. On daily time frame, clearly nothing doing here. So very much inside of the range. But it is worth pointing out, going back to weekly quickly, that this low was isolated. So here we had a bearish trend. We've spoken about it for months now. It failed to break and close below the previous wave's low. Last week's candle ringed that low, which means that this is definitely the end of this bearish wave. It must be a phase 2 as a result. Phase 2, phase 2, breakdown and sequentiality of cyclicity, trend is over. So no longer do we have a trend on this time frame. So I will talk about why that there was a valid overlay for us there later in the week. In any case, that's that done and dusted, but I do need to just point out that we no longer have any trending conditions on Aussie CAD, even though it has been something that we've been looking at for quite some time. So that's one quite big change as a result of last week. Aussie Kiwi, very little happened last week, as you can see on this time frame, right in the middle of the channel. And yeah, okay, so we've potentially got a valid M pattern to go short here, if that's what you want to do. But you know, I've been leaving this very much alone for quite some time now. Trends there. Kiwi Swiss weekly first, another one of those bearish engulfing impulse candles. Not an impulse wave in this case, although it might turn out to be this week. But we're obviously inside of the channel, no valid WM pattern. But that strong bearish movement last week gave us a breakout here as well, but another inside close. You know, so across so many of these pairs, we got this inside close. But in any event, we'll have a look at the lower time frame in a second. So trending, yes, on daily. Kiwi Swiss, make sure I get the right one. Trending, yes. Strong, yes, because it's our first breakout. I beg your pardon, it's not strong because we've got the inside close. And well, technically a phase 2 because we have in fact now had that low ringed, but only today, it has to be said. So that's pretty much that. I would need to just update that for being a phase 2. But you know, if you were looking at this with our standard view for what's our starting point, if you like, for an impulse strategy, then an inside bar means that the existing wave is treated as a continuation. I know that that looks a little bit different now, but had you been doing the analysis like that over the weekend, then you would have potentially dropped down to this time frame and you'd have been looking to short this market, which you would have actually done earlier today. So at 8 a.m. The 4 a.m. to 8 a.m. candle gave us an impulse candle for the 4-hour time frame. And what's our ATR on this? 50 pips, ooh, pretty low. But that should be sufficient for us to get away without having to use an ATR stop. Yeah, certainly. Okay, pretty close. And it would look something like that. So we've just had this candle closed now. We can't yet trail stop using 3-6, but yeah, cyclicity, bearish cyclicity still technically intact. Yes, we did get this double test at the bottom over here. Technically, that's not relevant for looking at that cyclicity. We did use it to look for an overlay, which of course we got nice little overlay winner there on Friday. But as you know, if once you've got your isolated low that's ringed, you're then looking for either the market to go lower, make that. If it wasn't ringed, because this wasn't ringed with the inside bar. So either the market needs to go lower to give us a continuation, or if it effectively gets ringed, which it ultimately was here, then we're into a bullish wave. So bearish, bullish, and now, of course, bearish. That's all we've got in terms of that cyclicity here. So this double test over here did help us get into a bullish overlay. Right, so Kiwi Swiss on daily, as I've mentioned, trending, yes, not strong, and technically I'm treating it now as a phase 2. because of that higher low there. But yeah, if you wanted to get short on this on an H4 impulse based on your analysis up until the end of the weekend, then fine. One other point to note before I actually run away with myself is that this was actually also inside of that channel, so maybe you wouldn't have. All right, moving on. KiwiCAD, we're not interested in that. Let's go to weekly first. Get there in the end. So here's another one where we did have bearish cyclicity, which, as we spoke about a couple of weeks ago, did come to an end. So technically, obviously, this trend is over. So we are ranging. We're also inside of the channel. And that's pretty much that. So nothing of interest there. However, we did get a breakout. I think that made a higher high. No, not quite. That's an inside bar. We did get that breakout. It did close outside, but it's pulled back inside of the channel again as well. Just like so many of these. One of the less interesting pairs at the moment, obviously, but we can treat this as a trending market because we haven't yet had a breakdown, and that cyclicity. So I would say trending, yes, but it's not strong, clearly, and technically we are still very much in a phase 2. And that brings us to an end of our 28 currency pairs. So just going back to the top, let's put it up there. Let me just quickly show you what our score sheets look like. Here's our weekly score sheet, first of all, where if you're looking for a daily impulse, you want to have certainly trending, preferably strong, and phase 1. Now you can see that we've only got a few phase 1s here. So Aussie USD trending strong phase 1 is one that we therefore could look at through the course of this week for a daily impulse. Let's just have a very quick look at that. Oops. One further. Because of what we're seeing on the weekly. Now, remember, we did say that this phase 1 wave is low quality. If that is one of your selection criteria, certainly it's something that I do like to look at as well. You might want to stay away from that. Otherwise, you would have probably already shorted this for a daily impulse, because we've been in this technical phase 1 for, well, basically 3 weeks. This is the 4th week. Yeah, so including the breakout week, 4 weeks certainly. In which case you may well have shorted it up here already with that bearish impulse candle. And on the ATR, maybe you hit take profit, maybe not. Ultimately, though, if you didn't hit your take profit with your standard targeting, you would have been at break even on this, but the spike last week, Tuesday, would have taken you out, which is actually another setup. Would have been an ATR stop on this one, I'm sure, and you would have trailed your stop to above that high. So instead of chasing after trades, I would say that if you are trading this, then you would already be in a daily impulse on that one. So that's that. Looking at other strongly trending. Okay, this is not strongly trending, so we leave that. GBP Aussie, I'm going to talk about that at more length, but certainly I did point out that although we're currently in a phase 1 here, we don't yet have that pullback. You need to have your pullback before you look to short this. I'll go long, I beg your pardon. Remember, it's a long trend on GBP Aussie. And then Aussie Swiss. Let's just have a look at that as well. You can see the Aussie featuring in all of these, being the weakest of the lot. Aussie Swiss, we're currently getting a pullback on this. Remember, if we look at weekly trending, yes. Phase 1, yes. If we get more of a pullback here and a bearish impulse candle, absolutely, this would be a short for our daily impulse. So that's how I would use this short list. Basically need to have trending, strong, and phase 1 for a daily impulse. And then similarly for the H4 impulse, we're looking for trending, strong, phase 1. Euro Swiss, I spoke to you about. GBP CAD, GBP Aussie, and Aussie Swiss. We looked at all of those already. But you can see very quickly and easily, based on the score sheet, which meet all the selection criteria for the strategy. Right, so let's now jump into our chat box, starting at the top with Muna, Euro Yen, looking at hybrid long. I won't get too much into hybrids at the moment, but yes, let's have a quick look. So I presume it's because you're looking. So I'm going to know, because we need to have bullish cyclicity establish itself on the execution time frame. So we had that here. We had the bearish cyclicity. We had a breakdown in the bearish cyclicity with this low being isolated and ringed by that candle, which was also therefore the setup candle because it's an impulse candle. So we had the higher low. So with that breakdown in bearish cyclicity, we then started looking for the final selection criteria. So actually, now we've had a resumption in bearish cyclicity. This bearish cyclicity needs to break down first. Okay, so there's pretty much the whole lesson on hybrids. Surprise, good morning. The score sheet, well, we're going to be talking about this through the course of the week. As I mentioned, I'm happy to obviously make this available to you guys, but it really is a very simple spreadsheet. So yeah, quite happy to share the Google Drive link. We will talk about that through the course of this week. Peter's asking, will I be looking at gold and the US indices during the bootcamp at all? Yes, we certainly can do that, because obviously for those of you who are on the funded account program and have moved through to the portfolio manager levels, we need to look at those. We will look at them through the course of the bootcamp. KiwiCAD, Pumlani asking, is that not weekly overlay? In your overlays, Pumlani. Sorry, what am I looking for? KiwiCAD. Right, so, well, let's talk about overlays a bit more through the course of this week. But basically, when we had this, the overlay strategy is used in a few ways. So, Pumlani, I'd really like to leave this discussion for later in the week. But the overlay is either a counter trend, which is where we really focus on using it as an overlay specifically. In other words, when you're in a phase one, so you've got an impulse setup and you're in your impulse trade, and that starts breaking down, that's a counter trend trade, effectively, is what you'd be looking at doing there. So if we were in a phase one, we'd look to potentially go in the opposite direction with the overlay. You also can use it in a confirmed phase one only, or alternatively, you can use confirmed and potential phase one waves and go in the opposite direction. Still counter trend, effectively. And then finally, you can use it in a range. So when you're looking at price action around range boundaries, you can look at it there. So in this case here, we had a potential bearish phase one. So during the course of this bearish wave on weekly, we would have been looking to go long on this, and may well have done, but we would have dropped down to the lower time frame for that. So if you're using the single time frame overlay, then you would have already taken that trade a few weeks ago. And so yes, to answer your question, as far as that's concerned, you could have done that then. But we really are finding that the dual time frame overlay is much more robust, not to say anti-fragile. Nikki, do I trade cryptos? So I'll trade anything that is truly a liquid volatile instrument. Now, there's two things to that. It needs to have enough volatility. That's the main reason we don't trade Euro Swiss, because over the long term, it doesn't have enough volatility and also has periods of poor liquidity. And that was very visible, of course, in January 2015, which wiped out a lot of traders. But we need both of those things. We need a highly liquid market and lots of volatility. So cryptos are not very liquid. Even Bitcoin, which of course is the most highly traded of the lot, is not very liquid, but it's totally tradable, absolutely. And our strategies work fine on anything where you have got decent liquidity and of course volatility, and cryptos definitely are volatile, so they definitely tick that box. So in principle, very much so. Last year we had a lot of discussion around trading Bitcoin and made quite a lot of money on Bitcoin. The one final thing I would say on this, though, is of course our funded trader program, is designed to allow our members to access deep pools of capital. So you can start trading, $2 and even $4 million accounts within the next couple of years, which otherwise would be impossible. And that money is sitting there waiting for you guys to trade when you just pass certain tests along the way. And unfortunately, the providers of the capital don't allow us to trade cryptos on their money. But otherwise, in principle, I like the cryptos, absolutely. I prefer buying them and just keeping them, to be honest. I'm quite a big fan these days. So hopefully that answers your question. Hi, Dion. Why would my Aussie Swiss 4-hour chart have a bullish candle ending it? But your chart has 4 bearish candles in a row. Well, depends on what broker you're looking at. So there can definitely be differences across brokers. This is our funded trader broker. Let's have a quick look. Aussie Swiss. Where are we? And you want to look at H4. All right. So I've got all these bearish candles in a row. Why would your Aussie Swiss 4-hour chart have a bullish candle at? Right. So also bearing in mind that, if you're looking at Friday's close, I mean, this was the last candle on Friday. That's when liquidity falls to its lowest point during the course of the week, is just before the market closes on a Friday. So yeah, from broker to broker, you might see some difference around that time period. So not sure if that's, as you say, ending. Yeah, if it's ending at that time. This candle ended at midnight on Friday. This candle opened, and of course, midnight broker time. It opened midnight broker time this morning. So that would be the reason. Greg, how are you? Hope you guys are enjoying the summer up there. How do you measure volatility? Yeah, so the spread impact, to be honest with you, which we're also going to be talking about through the course of this week, is a great indication of relative volatility. So the spread impact is really the spread divided by the ATR. So it is very much an ATR calculation of some kind. Quite right, spot on. The absolute ATR is not that important. So if you have a currency pair that, let's say, has got a daily average true range of 1,000 pips, the USD ZAR being an example, as often as around that, even more. Is that a highly volatile pair? Well, if your spread is 200 pips, then no. And just as an extreme example, so 200 pips divided by 1,000, that's 1 to 5. That's not great at all. Spread is very much an indication of liquidity. So that's why we like the spread impact calculation, because it helps us with both liquidity and volatility. I'll show you how the trade manager works that out as well for you. For those of you interested in the trade manager, it does all of that for you. Cool. You're welcome. Perfect. All right. So guys, that's all the questions, I think. So I did promise it would be a more extended session today. Really, I just wanted to show you how we could do that scoring. And on the basis of that, we're going to build up over the next couple of days, looking at what trades we can take. Showing you a couple this morning. I haven't looked at much from last week, I know, but that's because I'm really focused on the week ahead of us. But last week was really mostly pretty dead, except for the overlays, which I will be talking about over the next couple of days. All right, guys, I see there's no more questions at the moment. I look forward to catching up with you guys again this evening. Remember, for those of you who are booked in and registered for the bootcamp, we will be sending the registration, the Zoom link out to you guys later on today. So please do look out for it. If you don't get it by, let's say, 6 p.m., then please do drop us an email at support@gptacademy.com, and we will make sure you get that link. And then, of course, tomorrow morning, bright and early, 6:30 Central African time, we'll be starting again, maybe 15 minutes later than that. So give you some time to make your coffee. The other thing I just want to point out is we do have a big storm approaching here in the Southern Cape. In the past, sometimes that's caused some connectivity problems. If that does happen, then so be it. We will just roll over into Thursday if necessary to make sure that we cover all the bases that we need to for this boot camp. So hopefully that's okay with you guys. But yeah, we are subject to very interesting weather patterns down here on the border of the Southern Ocean, especially this time of year. And if that does affect our connectivity, then we will be sure to make that up. All right, guys. So enjoy the day. I will see you this evening. Bye for now.